Bitcoin didn't collapse. It didn't panic. And in the face of war, uncertainty, and macro chaos, Bitcoin held the line. This isn't just price action, this is something bigger. In today's CryptoPulse deep dive, we're unpacking why Bitcoin is showing real resilience, how it's evolving into a global safe haven, and what this could mean for its long-term price and for your portfolio. Crypto assets are high risk and not regulated in the UK. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research. When the recent geopolitical crisis hit, markets wobbled. Bitcoin dropped from $106,000 to $103,000, but it didn't even touch the $100,000 level. Since then, it's traded sideways between $103,000 and $105,000. No panic. No collapse. In fact, it set a higher low above $100,400, a bullish signal in disguise. No, it hasn't ripped back to all-time highs. But Bitcoin did something more important. It showed resilience. In uncertain times, investors flock to risk-off assets. Traditionally, that means bonds or gold. Safe, predictable, slow. But something just changed. Bitcoin didn't behave like a volatile tech stock. It behaved like a maturing safe haven. Yes, there's still room for volatility. Yes, price can correct, maybe to $95,000, $88,000, or lower. But in this moment of tension, Bitcoin showed exactly why it's becoming a global hedge against chaos. Let's break it down. When the world gets unstable, money runs to safety. That's always been gold and bonds. But gold and bonds aren't what they used to be. Gold can't scale. Bonds are vulnerable to inflation and debt risk. Now Bitcoin is stepping into that space. It's limited in supply, it's borderless, it's censorship resistant, and now it's starting to show price stability in the face of war. That's not just a good sign. It's a historic milestone. Bitcoin is on track to take two mantles that currently belong to legacy finance. The base rate, like the Sandamp P500. The international safe haven, like gold and US Treasuries. Let's unpack that. In traditional investing, if you don't know what to buy, you buy the S&P 500. That's the base rate, the benchmark for global investing. Even Warren Buffett, over the past 50 years, has only slightly outperformed it. But zoom out. Over the past 10 years, Bitcoin has outperformed the S&P 500 in 7 of those 10 years. Over a 5-year window, it's beaten every major asset class. It's already behaving like the new benchmark. If you can't beat Bitcoin, you might as well own Bitcoin. Here's the second mantle. Gold and bonds have been the go-to safe haven assets during crises. But when the latest global conflict broke out, look at what happened. Gold rallied. Bitcoin didn't collapse. It held firm. And investors noticed. Even with panic selling from short-term holders, smart money bought the dip, including us. And that's the big takeaway. Bitcoin is starting to be treated like gold, not just like a risky tech trade. If this geopolitical situation worsens, if major nations like the US or China escalate, we'll likely see massive currency debasement, debt printing, inflation, capital controls. In those conditions, where would you want your wealth? Gold? Yes. But also Bitcoin. Because Bitcoin is digital, portable, auditable, finite. That's why smart investors are loading up now, not waiting for the headlines. Let's be honest. There are still people in crypto who panic sold during the dip. They've only been here 6 months. They don't have conviction. Gold holders, they've held for 50 years. Bitcoin veterans, we've been here through every bear market, from Mt. Gox to FTX. And we've learned one thing. Every global crisis strengthens Bitcoin's thesis. Let's talk numbers. Bitcoin's market cap, $2 trillion. US bond market, $30 trillion. Gold, $25 trillion. Sandamp P500, $40 trillion. Together, over $100 trillion in safe capital. If Bitcoin replaces even a fraction of that, we're not looking at 2x or 3x returns. We're talking 25x to 50x, a $2.5 million to $5 million Bitcoin by 2040. And that projection, it's not fantasy, it's math, based on capital flow and historical precedent. There's a saying, that person is made of gold. But in this decade, the new saying is, made of Bitcoin. Bitcoin isn't just holding price, it's holding its identity and proving its value as the base rate and safe haven of the digital age. So yes, the market may dip, yes, things may get volatile, but the conviction remains. And the data doesn't lie. If this deep dive gave you a clearer view of Bitcoin's future, do one thing now. Hit like, share this video, and subscribe for real insights, not hype. You're watching CryptoPulse, where we connect the macro with the chain so you can invest smarter. Until next time, stay sharp, stay curious, and stay ready.